Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friend Sam Clement. Sam, say hello.
John, how are you doing?
Sam, I'm doing okay. Even with all the negative stuff that's going on in the world right now, I'm doing okay.
Things could be much worse.
Things could be much worse. And, this week here on Trading Perspectives, it'd be very tempting to talk about the recent assassination attempt on former President Trump. We could talk about sector rotation within the stock market as the markets just continue to go up and up and up. However, it's not the tech stocks going up recently. It's the stuff that hasn't been going up for the last several years.
Yep.
Finally getting its turn. It'd be easy to talk about that stuff, but we figured, people can get that anywhere. So this week, Sam, I want to talk about the banking crisis in China and what that means for not only the Chinese economy, but also how Beijing is going to manage it and what that means for the rest of us.
Well, I think part of the reason, or really a main reason we kind of want to talk about this, is that it's kind of hard to find. You have to be looking for articles about this. It's not, the assassination attempt, the market the last week, 2 weeks. That's kind of, and what we do, that's all that's being talked about. And this is something that is frankly not being talked about. I mean, there's some articles, but you have to look for.
They are not mainstream articles. They're hard to find. They're not. It's not on every television every night. But in case you really just didn't know it, China's residential real estate market has turned upside down and really kind of looks a lot like what things were starting to look like in 2008, at the beginning of 2008. They've already had some major property developers like Evergrande and others have gone under. And this is an issue. It's a huge issue because Chinese investors largely have always viewed real estate as their primary asset class. And so that is where a lot of retirees, that's where a lot of people have sunk their money into new apartment buildings, saving up to get that house and out of the dorms or what have you the communists have put up. So this was really a huge generator of wealth for the Chinese consumer for a lot of years. Not unlike our housing crisis, they're leading up to 2008, but I'd say even more pronounced than that. And then all of a sudden, the bubble has kind of been popped over there, and no one's talking about it in the West, and yet we're seeing banks fail within the People's Republic like nobody's business, and no one knows.
Well, this is kind of a culmination of several decades, and I think you have to go back to Chinese now being allowed to own real estate.
Yeah.
That's kind of what started all of this, and it's taken a while.
Yeah.
It's taken decades. It's worked. It's been growing. I mean,
the economy's worked for people who buy one house, they buy another.
Yeah, and so that's this multi-decade kind of buildup in real estate is what's causing a lot of this, and we're seeing. I mean, it has a lot of similarities to the crisis that we had in the '80s with banks and the consolidation and
the savings and loan crisis.
Yep. On kind of a probably soon to be bigger scale.
Just by numbers alone, it would have to be. Because savings and loan were separate, sort of separate and apart from the commercial banking. Over there, from what I can tell, there's not a ton of difference. Now, don't get me wrong. I don't think this is going to lead to a collapse of the Chinese banking system because the money center banks in China are basically owned by Beijing. The Bank of China or whatnot might be floated out there on some exchange somewhere, but various entities of the central government, various arms, might own upwards of 65, 75, 80% of some of the largest banks. So obviously Beijing's not going to default on itself. It's not going to let itself go under. So I'm not worried about the money center banks. So I'm not worried about that level of liquidity. What I am worried about is 40 banks failed in China, I think, last week, and no one here in the United States knew about it. This is going to have some kind of contagion, and what you're going to see is borrowing and lending at the local level really dry up. And when that happens, it's going to clearly stifle initiative on the ground level, and it's also going to lead to a liquidity crisis for Chinese consumers.
Yeah, and I mean, there was an article about this in The Economist talking about how some of these banks, these small banks that, dot the whole countryside of China and have up to 40% of their loans are non-performing.
Yeah, although that's also known as out of business.
Yeah.
I mean, so
And so if you see those numbers, I mean, it's not kind of a contained thing to a few banks. It's this culmination of decades now of really loans that have worked because the real estate just kept kind of going up, and they may not have been good loans in the first place, but they
probably weren't.
But the fact that the market was doing fine, the economy was just exploding, covered
It's
up.
almost a Ponzi scheme in that regard.
Yeah, it was hard to have non-performing loans.
It was hard to have non-performing loans, and Sam, when you get to a level of 40% non-performing loans, you might as well just call for the regulators, because you're not going to get your money back. You're going out of business. And the thing is, for all those people that think otherwise, banks don't want to take your real estate. They don't want your collateral.
It's not. It's not a core part of the banking business.
Because if a bank comes in and takes your collateral, that means you couldn't sell your collateral to pay off the loan. So they don't really want to take an underwater asset. They want you to pay off your loan. If you got 40% non-performing, that's just not 30 days past. That's non-performing. That's you're not getting that money back. Those banks are out of business. That liquidity, that they used to provide has dried up, and you're going to see the countryside really kind of have some real issues. And then when small businesses and individual consumers don't have access to credit or liquidity, then that really does kill small business creation. Mm-hmm. That doesn't mean that Beijing can't wallpaper over it to a degree through the money center banks, and that's kind of what I really wanted to get at here. As awful as what's going on in the housing sector and the small banks sector in the Chinese economy, Beijing will be able to wallpaper over to a little degree, just based on its overall control of the government, and Xi, all of a sudden realizing the problems in the economy, has decided to leap back into manufacturing again, heavy manufacturing, in order to prop up exports, even as the domestic demand absolutely falls through the floor. So you're having a very bifurcated economy right now. The headline numbers might say one thing, Chinese economy slipped to 4%. It's actually weaker for the average Chinese consumer, and it's going to be a mess when they finally sort this out.
And when they sort it out, it's going to be, years?
It's going to be years.
I mean, a decade?
It's going to be decades.
But it's, the timing of all this, coincidence is not the right word, but it's pretty bad timing with what's going on globally. I mean,
it's horrible.
The onshoring that countries are wanting to do, the, more national focus of a lot of countries, the diversifying of supply chain outside of China to some China plus one, but some, Mexico, other countries. Mm. It's very bad timing. I mean, we're seeing prices fall, actually come down in a lot of the data out of China.
And the thing is, what is kind of scary to me is when people are having a hard time putting a chicken in every pot, when all of a sudden their household income is going down, they see their balance sheet erode. An old trick by governments being used for centuries is to rattle the saber, and come up with an outside enemy, in order to deflect or divert attention away from the economic realities. You have to invent a problem, and that's where I think we're running into some issues. That what does Xi do in order to get people to quit thinking about how difficult the domestic economy is? Do they continue to have provocations with Taiwan? Do they continue to build reefs in the Spratly Islands, pissing off the Philippines in the process? Do they get more aggressive in the Sea of Japan? It's like all of these things they can do and will likely continue to do, and continue to build up the PLA and the PLA Navy. And the more that they build those up, that's bad news for the United States.
Yeah, I think it's worth noting that this is not kind of a globally systemic issue. I mean, there's
the Chinese banking system?
Yes, I mean there's leakage, I guess, in other countries and industries and what have you. But I mean, the Chinese market is unique. It is. The real estate investment exposure of the average person is much higher than other countries.
I would say even taking sort of a step to the side on this, I would say what makes this a little bit different than the U.S. financial crisis in 2007 to 2009, technically 2008 to 2009, but was foreign banks had far more counterparty risk with the banks that were in trouble here in the United States. Our money center banks were in trouble. Our large regionals were in trouble just due to how the housing market collapsed. So just due to interbank loans and what have you, that meant Deutsche had a lot of exposure. That meant HSBC. It meant European banks, Asian banks. Everyone had exposure. Everyone. However, the thing about it is most, I would say, and I know I'm not completely accurate on this, but I would imagine and intuitively most of the counterparty risk that our major banks in the United States take with Chinese financial firms isn't with little old $10 billion bank in Jiangxi or Jian.
Yeah.
You know, I mean, that's not who they're taking their counterparty risk with. They're taking their counterparty risk with the big guys, the super big guys, which aren't going to fail because they're owned by Beijing. So in a lot of ways, the rest of the world is a little more immune from the Chinese banking problem and financial crisis and housing bubble. And then also you have little things like capital controls by the Chinese, and the way that it's not the financial system isn't as integrated into the global economy as the U.S. arguably is, and so it's not going to cause that level of discomfort as 2008 and 2009. Where it is going to cause discomfort is on the domestic scale, and really I can fully imagine the Communist Party, the CCP, Xi Jinping is going to use this as a wonderful opportunity to start gobbling up banks and propping them and throwing them underneath newly created public banks or banks run by the central government. And after that, they will be able to dictate how money flows in the economy much more strongly than they have over the last couple of decades.
Yeah, it's kind of like there's one less intermediary.
Yes.
There's one less kind of step in the process.
This is a wonderful opportunity for the Communist Party to get rid of competition.
It's really not, there's not even a central bank. I mean, there is, but it's one the same.
Yeah.
I mean, we could argue that ours is kind of overlapping as well, but at least there's some kind of degree of separation.
Well, there's at least the pretense of it.
Yeah, that's not there at all.
Yeah, so
so the banks are the central bank or the government.
Yes.
RG.
Yes, and the banks that are failing are the private banks, and I don't think that G's going to bemoan them or worry about them too much. He's not going to miss them, and by the time the smoke settles and the dust clears, I got that wrong, didn't I? The dust settled and the smoke clears. You really will see a smaller private sector in the Chinese economy, and that is just fine with the Communist Party. And what we will likely see moving forward is gone are the days that China's growing 8, 9, 10%. One, they're coming off of a higher base than they once were. But then two, you're going to get back to far more centrally controlled, a far more centrally planned and controlled economy, and just by nature, they're not going to be as innovative. Outside of maybe the Defense Department, they're not going to be as innovative, and if they're not as innovative, they're not going to grow as rapidly. It's also going to curtail foreign investment in China. If the government comes in and nationalizes huge chunks of it and controls it and demands where the capital goes, foreign investors don't want to see that. So I am truly looking for, moving forward, depressed GDP growth rates out of the Middle Kingdom for the foreseeable future. And I'm also but I'm anticipating the Communist Party is going to increase its power over the economy moving forward. Not that it hasn't always had some, but it's going to double down on it.
Where do you see this 10 years from now?
10 years from now, I see this as China as never fully getting to that level that everyone thought they were going to. They never truly swamped the U.S. Economy. I was going to see them with a larger military and a larger navy, and dare I say it, they're going to be the Asian equivalent of Russia, but larger. And they're going to be a blunt force object out there at odds with what's happening in the Western world with the Western democracies. However, they are not going to be that global hegemon that everyone thought that they were going to be in order to fully face off and compete against the United States.
I mean,
that's what I think.
The population growth is not continuing.
No, it's shrinking.
Right. So that tailwind of population boom, that's hard to overcome no matter kind of what policies you have. And if you loosen up the ability to have investments at a time and real estate at a time where your population is exploding, that's great. That's not continuing.
That's not continuing. Well, that's what happened from the one child policy.
Right.
That's not. You can't replace your population with everyone has one child.
Yeah.
And so that's what's going on. And so I think, the numbers start tailing off pretty quickly. And over the next several decades, China loses literally hundreds of millions of people. So they're going to have to come up with the money to fund all these old people at the same time, trying to grow their economy and be more efficient. But you're just simply not going to be horribly dynamic and grow at an exponential rate if the government controls everything. We've talked about that's not an inclusive economy, that's an exclusive economy, and ultimately politicians being what they are, and as opposed to economists, they're going to focus on things they can see, feel, and touch, and they're going to focus on steel and other such things as opposed to technology. And those people with brains will brains and get up and go will get up and leave. Like they have, but they haven't been, and we're going to start seeing a huge, just sort of surge, or whatever you want to call it, of Chinese billionaires and entrepreneurs leaving that country if they can get their money out, and that's the big if.
And that's the thing with U.S. investors as well, or just non-Chinese investors.
Yeah.
There's plenty already talking about how they can't get their money out of the PRC. Why would you invest there or continue to invest there?
Well,
and so I think,
Sam, as you know, we don't.
Yeah.
I
know we don't, but you see people that are supposed to be really smart having money they can't get out of the country.
I think a lot of people when they buy into China, they do so sort of indirectly or passively. If you were to ask the average American, what do you really want to invest in the PRC? Hell no, I don't. Do you want to have some emerging markets in your portfolio? Sure, why not? Yeah, that's where the growth is.
Which is like half the index, 40%.
Whereas, you go take a look at some of the most well-known exchange-traded funds, VWO or EEM, and you'll see a huge slug devoted to the People's Republic of China.
And it's hard not to if you're just market weight.
Without a doubt. And we will always have some kind of indirect exposure to China just through supply chains and what have you, but it's that direct exposure which scares me. So you and I have talked about this because of what's been happening in China with its real estate market, now with this military, now with the banking crisis, and increased focus back on the old tried and true heavy manufacturing and exports, and increased focus on DoD spending, Department of Defense expenditures. I don't think this is a very good bet. I don't think they're going to be focused on increasing profitability for the private sector. And if they're not focused on that, they don't care what happens to private foreign investors. And by the way, you buy into some of these Chinese companies, you're not even guaranteed currently to get anything out of there. I can't imagine what's going to happen moving forward. I just think it's a sucker's bet.
It's like, look, we've seen some canaries in the coal mine out of Chinese private companies talking about, no longer talking about their earnings and their quarterly earnings reports. They're talking about these government programs that they're helping support.
Yes.
To me, that's a very loud canary.
Well,
if picture Amazon or Apple.
I'm thinking of a bigger bird than a canary.
Picture Amazon or Apple or companies of that size
just coming out and
saying, "Hey, don't worry about our earnings. We're going to focus on this policy that the government
on the Inflation Reduction Act. Well, that's what we're going to focus on. We're going to focus on this.
Yeah."
As opposed to profitability.
That's years ago we first started talking about that, and the trend has only continued, if not worsened.
Yes.
So, that's not a ship that turns very quickly, but it's definitely turning away from the private sector.
is definitely turning away from the private sector. I think that that ship will have completed its U-turn. You asked me where China is going to be in a decade. I think it will have completed that U-turn at that point. Doesn't mean that it won't be able to grow, just as the Soviet Union was able to grow, but eventually it was Soviet Union was trapped or had a ceiling by its own limitations. That's the same thing that's going to happen to China. I would tell you, private investors out there, it's not that there isn't money to be made maybe in China, but do so. Investing there, you do so at your own risk, and I would say it's not worth the risk. Personally, that's not to say that we will never have direct Chinese investments in at Oakworth Capital Bank, but when I take a look at it, I can't imagine ever being overly bullish about the prospects of making money there.
I agree.
How about that? With everything going on in the world, we're talking about investing in China and how we don't like
Learn
it.
something new.
Yeah, and this isn't us being Americans or nationalistics. I mean, it's just literally taking a look at things. I mean, so much wealth has been evaporated for the average Chinese consumer through this housing crisis, the banking issues that are going on, and then you just see Xi, retrenching and trying to regain control over the economy. You add all this stuff up together, go back to the three characteristics of any healthy economy: rule of law, which debatable. Strong individual property rights, real debatable, and then the development of human capital, which maybe they've got,
but it's you can't.
But 2 out of 3 aren't there.
This isn't baseball.
Yeah.
1 out of 3 is not great.
Yeah, 1 out of 3 is not great. So I just think there are other places where people can invest their money.
I agree.
All right. Well, guys, thank you all so much for listening. We always love to hear from you all. So if you have any comments or questions, please, by all means, let us know. You can always drop us a line at tradingperspectives@oakworth.com, or you can leave us a review on the podcast outlet of your choice. If you're interested in reading more, hearing more of what we have to say or how we think, you can always go to oakworth.com, OAKWORTH.com, and good night. Go to the Thought Leadership tab and look for all kinds of exciting information, including links to previous Trading Perspectives podcasts, links to our blog/newsletter Common Sense, and links to our quarterly analytical piece, which we call Macro and Market, which is getting ready to be released, I think probably within any day now. So be looking for that. All right. With that, Sam, I'm going to give you a last chance to say something good on this topic.
That's all I've got.
That's all I've got today, too. Y'all take care.